Good afternoon. This is Matthew Lindsay with Precision Home Group here in Anchorage, coming to you live today to talk to you about real estate. So we come to you live every day, Monday through Saturday, to talk to you about things like real estate, business, and life. So today we're focusing on sellers of real estate, and we're more importantly talking about refinancing your mortgage. So I had a lot of questions from people about, hey, should I refinance? Should I sell? What's better? I've even had some people come up to me, believe it or not, and say, hey, we want to refinance our house right before we sell it because I want to take money out, complete repairs, and then go sell the home. So we're going to talk about that. We're going to dig down into refinance, just some basics of that, how to do it and why you should. Now, before we get started, I want to let you know that I am not a lender. Okay, I don't work for the banks. This is my experience. These are the things that I know. If you have deeper questions, you want to know rates, you want to know things, you want to know the terms of a refinance, I would love to get you connected to the right lender for you so that we can get those answers and we can work together to see, is this the best choice for you, or do we need to sell at this time? So we got that out of the way. Let's jump into it. Now with refinancing, what do we need to do first? Looking at one or the other. I believe we need to get down to the bottom of it. We need to find out what is your motivation and what is your goal. What are you trying to do at the end of the day? Is this a move to go pull money out of your home so that you can go earn more with it somewhere else? That might be something that we need to do. And you're trying to keep the home. Or do you want to sell the home, pull the money out, and go put it in something else? Because you may have options with other living arrangements. So we need to figure out, first and foremost, what it is that you want to do and what the long-term goal is. With all my clients, I want to make sure that we're looking long-term first, and then we're going to start backtracking, figuring out benchmarks we need to hit to make sure that we hit that long-term goal, but break it down into manageable steps in the meantime. So first thing is that, then we're gonna go talk to a lender. We're gonna see, hey, if we're leaning towards refinance, we need to see what are the refinance terms. We need to look at loan terms. We need to look at, things like interest rates. We also need to see, hey, where's your credit at? Are you in a place where you're gonna get a better rate than where you currently are with your current mortgage? We also need to start looking at, hey, do you have equity available in the home? And if we did refinance you today, when are you looking to sell the property? If you're looking to sell the property within a year or two, it may not make sense. You're pulling all your sale proceeds out of that home right now, and you may actually have to bring money to the table when you go to sell in a year or two, so that may not be the best case for you. But again, we talked about goals and where you want to be. Step number one. Number two is we are looking at terms with your lender. We're looking at the interest rates, credit scores, and things like that, and see what type of terms we can actually get you for that refinance, okay? Then we need to start looking at your home. Hey, what is the current value of the home? Current value of the home is not always going to be the tax assessed value of your home that the municipality, the city, the state provides you, okay? They're not going into your home, they're not appraisers, they're assessors, and that's just what it is. It's a quick assessment of the home that you pay taxes on. So we're gonna go in and we're gonna find out what's the current value of your home, and that's going to be the current market value. What would somebody today pay for your home based off of comparable homes in the area? So after we have all of that put together, we can move on to the next step, which is, looking at different lenders. So we talk to one lender, find out their terms, kind of shop around, see who the best rates are going to be. And keep in mind, just because someone has a better rate, an interest rate, does not mean that is the best deal. There's other things that go into a mortgage besides interest. And if you keep that in mind and look at the whole picture, you can actually get a better deal with a higher rate somewhere else. So I'd love to talk to you about that further. If you have questions about that question in particular, shoot me a direct message and I'll get back to you. I'll probably make our own video on that at a later time, okay? So we need to know what our all-in costs are, okay? We need to know, hey, what is that appraisal gonna cost? We need to know what our closing costs. We need to know if there's origination fee. We need to know all the different lender costs. And all these different things are the things that play into why a rate doesn't always make, why a lower or higher rate doesn't always make the best choice, okay? So we're gonna get that, start doing the paperwork, start going through the process. And once we have the whole picture of that refinance, what is it gonna cost? What are the rates? What are the terms? What we're also gonna be doing at the same time while the lender's working on that, I'm gonna be over here helping you with, hey, what's your payoff on your current mortgage, okay? And what is the comparable market value of your home? We did that for both pictures. And we'll see, hey, what are all the closing fees associated with actually selling your home, doing some repairs that we'll need to do to get your home ready to sell, and look at both of those together. Once we have a clear picture on what happens on both sides of the deal, we can actually start making some educated decisions rather than just a gut decision on the seat of your on the edge of your seat. You know, we want to make educated decisions and provide all the facts for you, because then we can move forward knowing what it is that we need to do. So hopefully that brings some clarity to kind of the refinance process as well as the selling process. At the end of the day, we're going to gear it towards what your long-term goals are. But in the beginning, I mentioned that client who wanted to refinance, pull that cash out right before we went to sell. In that situation, it didn't make sense because they didn't have that much equity in there, and we were gonna go sell right after we did the repairs. That home may sell faster, but they're gonna have to bring more money to the table because they pull all their sale proceeds out right before when they do the refinance. And then when we go to sell, we have to come up with the commissions, the closing costs, those repairs, and everything else associated with selling. So wanted you to know more information on that. Give me a call, give me a direct message, an email if you have more questions about that. And later this week, we're gonna start talking about refinancing for an investment property. World's difference. I'm excited to talk about that. It's a great tool to pull money out in order to go reinvest it somewhere else at a higher rate. Totally different picture than a single family home or a residential mortgage. So I'm excited about that. Stay tuned for that. And as always, have a great day. Hit that follow, hit that like, and subscribe.